Let's look at Air Canada's stock today. So it's down 8% year to date. The TSX is doing much better at plus 4%. But if you look at the past 5 years, it's been a continuous struggle for Air Canada ever since 2020 and the disruption in the airline industry and a sharp decline in travel demand. The stock has never been able to get back to its levels in early 2020 and 2019 when it was about $50 a share or more. Right now, it's trading at $17 or just under $18, so it's nowhere near that $50 mark. So it's been hammered by demand, and obviously now with concerns about recession and inflation still high, that hasn't helped things. So people are still a bit hesitant to invest in it. But I'll look at whether it makes sense to do so anyways, because one of the things that makes Air Canada an appealing stock is in Canada there's not a lot of competition when it comes to big airlines. I mean, you've got WestJet, but that's about it as far as big national carriers. So if you want to travel within the country, Air Canada is going to be a dominant force, and that's not likely going to change anytime soon. There's not a whole lot of, there's not any big competitors coming in that are going to put the company in danger. So its position in the industry is pretty strong, and even if it's not doing so well right now, or if people are concerned about how it might do, then in the long run it should be able to recover. Now, it did post its earnings recently. So on October 30th, it had its Q3 numbers. So operating at revenue, $6.3 billion, was up 19%. So that's pretty strong. Operating income was 22%. So that's really good. Again, increased $771 million year over year. Third quarter cash flow was $408 million. Free cash flow of 135. So the company is doing a lot better than in the previous year. So demand is stronger. They're getting back to more consistent profitability. So let's take a look at the actual earnings numbers here, or the main metrics. So yeah, net income of $1.25 billion versus a loss of $508 million a year ago. So that's a pretty significant improvement. So the airline is doing a lot better. But some investors might still be a little concerned that it's not going to be sustainable, especially if there's a slowdown in the economy and there's fewer people traveling. But so far that doesn't seem to be the case. Available seat miles up 9.8%, revenue passenger miles, another key metric, up 13.9%. So across all of its main key metrics, Air Canada is doing a lot better. And so heading into next year, there's obviously the challenge that maybe things slow down a little bit. But so far, despite people cutting back on, discretionary purchases, travel seems to be pretty resilient. People are still willing to spend to travel, and that's a positive sign. And in the longer run, even if you are concerned about that, again, because it's such a strong, it has a strong position in its industry, it's not likely that, that any sort of downturn is going to last for too long, just because travel is a necessity in the business world, and a lot of people just like leisure travel, and have shown that regardless of inflation, they're still willing to travel. So that's a positive thing for Air Canada in the long term. Another thing to consider is that oil prices have been coming down recently, and if that continues, then that's only going to help their margins and their profitability. And again, their operating margin really strong, 22.3% for just 12.1% a year ago. So, as long as there's no reason to expect that there's going to be another wave of shutdowns or travel restrictions, and so as long as that's the case, Air Canada should be back to generating more consistent, profitable numbers. And so if we look at their financials, obviously in recent years they haven't been great. We've got those big losses, but you look at 2019, they were profitable. It's just when you had the shutdown in 2020, 2021 was still not great. 2022 was starting to recover, right? So you do see a bit of a progression, a bit of an improvement in that top line. This is the trailing 12 months, so $2.2 billion. So you can see they're doing better over the past 4 quarters than they did in 2019. So that's a really positive sign. So even if that slows down a little bit, at the very least, the company should be profitable moving forward. And that's a good sign for investors. So right now, if you look at the stock, in terms of its key statistics, I mean, it's trading at a really low earnings multiple, just under 3, forward PE of less than 6. This is based on where analysts expect it to be within the next 12 months as far as earnings go. Price to sales 0.3. So I mean, it's trading at some really incredibly low multiples of earnings. So the stock is pretty promising, especially for people who are looking to invest for the long term. Because even though right now the stock isn't doing well, with Air Canada, its profit margin up around 11%, operating margin at 22%, it's doing a lot better than it was. And so it may just be a matter of time before the stock starts to pick up again. Because if you look at the past 12 months, it was creeping up. In 2023, it's or mid 2023 was starting to creep up, but as interest rates have continue to increase, and there's been concerns about a recession, that's tapered off, and it's given back a lot of those gains. So it's been pretty volatile over the past few years. But over the longer term, right? If we go back to 2015, 2016, right? It was on a pretty strong trajectory. Now, who knows if it's going to get back to these levels ever again, but if you look at where the stock is right now, it's it looks pretty cheap compared to where it was and how strong of a position the company is in. So a lot of people are, I think, overreacting to the concern about a recession, what that will be. But you could say the same thing about inflation, right? That with inflation being high, that should have destroyed travel demand too, but that didn't happen either. And so there's a lot of talk about possible soft landing, and Canada thinking, may not even have a recession at all. So there's not a whole lot of reason to think that there's going to be a huge drop in travel demand, but it just looks like people are just overly cautious with Air Canada and the company, just because it hasn't done terribly well in the last few years. But as you saw from its financials, I mean, the company's in much better shape now than it was. It looks to be in a good position now. It's recovering. Let's take a look at its cash flow. It's another key one for investors if you're looking at what shape the business is in. And you can see free cash flow each of the past 4 quarters. So 2.4 billion. That's a solid amount of free cash flow for a stock that doesn't pay a dividend. So previous years, again, weren't great, but it's getting back up there. So the overarching story is that the company is improving, and now its financials are also starting to show that. Because in 2022, it's still in the early stages of that recovery, but now in 2023, it's doing a whole lot better. And even if it does faces a bit of a slowdown in 2024, there's no huge reason to expect that the company is going to continue to struggle. Now, if we look at where analysts think the stock is going to go, we can look at the consensus analyst price target, which, according to MarketBeat, has about just under $18. So, I mean, that's a fair bit of upside from where the stock is right now, about 66%. And this is typically looking at just where analysts think the stock is going to go over the next 12 months. So over the longer term, there could be a lot more upside for investors who are willing to, hang on longer. Like if we look at the recent price targets for the stock, I mean, even though they've been lowered, you look at most of these price targets, 33, 29, 27, one as high as 42 from JP Morgan. So, I mean, there's a lot of bullish forecasts on there. I mean, Royal Bank has one of the lowest ones of just 1% upside based on, actually lower now. It's $17. It expects it to go lower, but it's in the minority there, as most brokerages think that the stock is undervalued. And I mean, these are some pretty huge gains should it achieve those. So even though Air Canada stock hasn't been doing well, I think it's really undervalued. It's been undervalued for a while now. For the past few years, you could be saying that it was due for a rally and that it should be improving. But now that its financials are finally catching up, I think it's just a matter of time before it really does start to lift up and go a lot higher. It may take into next year, especially if potentially if there's a cut in interest rates, or you know there's more clarity about whether a recession is going to happen or not and how bad it is. And I think once those fears sort of calm down a bit, then I think that there'll be room for the stock to rally. So I think the good news is that the financials are in good shape. The company is doing a lot better. And so it's a good stock potentially to buy, because it's still nowhere near where it was in 2020, early 2020. So I think this is a stock that could easily double in value, maybe even go higher than that, back to around 40 or higher. So I think as long as you're willing to buy and hold, I think this is a good stock to buy right now.